That is really funny. Facebook was like, Melnick, you're done. It's too much. It's too much on our servers, Mr. Melnick. You gotta slow it down, man. You gotta slow it down. Like, oh man. All right. Um, I'm good. I'm live. You see the video? Does anybody have the link? Do I have to look for the link? Is it showing the link? Waiting for YouTube and Facebook. But I'm still good. It's already streaming. We already have viewers. All right. Ladies and gentlemen, due to Facebook saying, Mark, you're uploading too many gigs to our server, we're going to continue the huge free education bonanza part 2, and we're going to go into how to create strategies, how I created the strategy, and how we could add to the strategy, and how you could find statistical anomalies in the market which could help you make money. We're going to discuss that and a little bit more, not much more, but in a little bit more right here on the Newsbeat live huge free education bonanza number 2. Good afternoon, ladies and gentlemen. Welcome to the Newsbeat Live Huge Free Education Bonanza number 2. And if I could say that 3 times fast, I don't know what would happen then, but that would be pretty impressive. So, we're talking about how to create a strategy, finding statistical anomalies in the market. And let's go ahead and discuss that. So, we're talking about General Motors, and if you're watching this video for the first time, we created a simple strategy. And again, I like making simple money, where basically what happens in this market, for whatever reason, for the year 2018, something really good has been happening. So, for compliance reasons, you could consider these numbers phony, because the truth is I will never be able to show you the back end reports of these numbers. That's a fact. So consider these numbers just random numbers, where we are exercising a strategy overseas in a foreign market, and basically coming out with swing trades that have a phenomenally high hit rate of 93%. I'll say it every time I use this number. There is no chance hell freezes over that I think that I'm going to hit close to 93%. It's just an anomaly. And I'm going to show you how to find statistical anomalies in the market. The truth is, if this strategy was 25% worse, I would strike a gold mine right now. I would strike a gold mine right now. So, with that being said, we developed a strategy which we shared with you that had a very simple coding for the software TC2000. It was a very, very simple coding, and it basically shows you simple formulas that you're just basically, this is the entire code. Now, we're going to be adding to the code, and we're going to be adding to it, and it just basically, what it's doing is it's looking for a candlestick on the daily that um, is red or green, being the top or bottom end of one's range. In English, it's looking for a short when you have a red candlestick that tail and or body is the highest point in a prior 10 candlestick range, and it's betting on the stock to go down. And it's also using a green candlestick in a prior 10 candlestick range that bottomed out the stock in a 10 candlestick range to go up. So somebody in the room said General Motors. I'm not cherry picking anything. I'll show you 20 other names that will work or fail. I don't know. But I'm focusing on large companies. I couldn't care about the 70-cent biotech you're looking at that went from $50 to 70 cents. Do not care to look at that name. We're talking real companies, real names, things that you can grow yourself with indefinitely with no ceiling. So according to that methodology, this candlestick right here was the highest candlestick in a 10 candlestick range, and it closed red. Now, what do I mean when a candlestick closes red? You have to base it on open versus close. So if you have a $50 stock that gaps up to $60 and opens up at $60 and closes at $59.50, even though it's up $9.50, that would qualify to me as a red bar. Just so we're clear on what defines a red and green bar. No confusion. So right over here, and this simple algorithm hit that hit rate of 93%. There's a little more entwined into it, but not much. And the last trades we did off of it was actually buying Caterpillar puts on Monday. And what we're going to do to exercise this strategy is if you're interested in it and you want to see people like us developing it, working on it, changing it, updating it in real time, and making live trades on it, this is going to be funded fully by tomorrow. It's $10,000. It's for charitable purposes only. And we're going to be duplicating, or I'm going to be duplicating the trades potentially in another account, but I'm going to be sharing with you guys entries, exits for ideas utilizing this. But instead of just throwing you an idea, I want to bring you on board and actually show you what we're going to be doing. So, Sandro, is that the YouTube link? Thank you, Sandro. I appreciate that. And I'm just gonna spam it a few times in chat, and spam it a few times in chat, just so it's there. Okay, just so other people could watch as well. And what we're basically doing with this account is we're applying strategies, but in particular the following strategy. So that's why we're going over it today. Fair enough? Fair enough. So you're looking for the highest candlestick. You're looking for the highest we were using GM as an example. You're using the highest candlestick in a 10 candlestick range to buy a put spread in the future. Now, I know on Caterpillar, I just bought straight puts and the stock plummeted the next day and that made it worth. In the future, I'll be doing put spreads, which won't pay as much as the straight puts when they work right away, but won't destroy me if the stock moves sideways and then goes. So right over here was the last example where this methodology would have been applied to short right here. The last time the time before that to be applied would actually be right here for a long. You could see how nice that would have worked out. Believe it or not, the way this strategy is designed now, the last time it would have been applied is right over here at 36.03. The stock would have gone against you to 37 and then would have dropped to 33.85. So you would have had over $2 in your favor on this Thursday. Now, there's another thing that I'm going to be slowly applying to the strategy, in which I didn't tell you, which is applied on the Asian side of the algorithmic strategy. I'm ignoring bearish and bullish engulfing bars. So that's one statistical anomaly. What I've noticed on the Chinese side, and it would have worked in GM with a put spread, by the way, just so we're clear. If you bought a put spread here, couple months out, and you would have had a point where you were up decently, a couple points in a General Motors, you would have been up decently in a put spread in General Motors. So just to be clear, this would have worked, but I do want to talk about that more. So what I've noticed is on the engulfing bars, you tend to digest. Sometimes you get a bearish engulfing bar and you plummet the next day. But usually, statistically speaking, it's not even arguable. Doesn't happen 100% of the time. I'm going to move my mug over here. Doesn't happen 100% of the time. But what happens is when you put in an engulfing bar, and an engulfing bar is a candlestick or a bar that breaks the prior day's low and high, like this one. The low here on November 2nd is lower than the low here on November 1st. The high here on November 2nd is higher than the high on November 1st. That's an engulfing bar. So part of the algorithmic strategy, which isn't coded into the scan, but I could see visually right now, we're going to be adding more. And that's why we're having this discussion to talk about what we're adding and how we're going to add stuff that we aren't even seeing now into the future to improve the strategy. And when you create an algorithmic strategy, The first thing I always ask, and everybody has a different way. There's so many algorithmic strategies. I've seen the hedge strategies, which try to take advantages of like certain anomalies in the market, like a certain strike call is trading too high compared to another, and it'll just do a spread and try to lock in a nickel or a dime on the entire trade with zero risk. I've seen algos like that. We are humans. We're not going to be on top of that. I'm telling you right now. So we have to find a different form of strategy to take advantage of, hopefully and definitely something that's working right now in the market this year. And we're going to continue to develop this as I move forward. Now, why are sharing algorithmic strategies so important? Just to quickly go through that, the nut in a 30-second nutshell to tell you why it's so important. It's the most secretive industry on Wall Street. It is, I would probably say Pentagon secrets are more commonly known than algorithmic strategies. Nobody shares an algorithmic strategy. Nobody. In fact, the last time you even saw it in the news was when someone at Goldman Sachs took the strategy and went elsewhere and sued in the entire firm and hundreds of millions of dollars, and there was like algo World War One like happened, right? Nobody shares it. And even though what I do is phenomenally expensive to these large firms who want to hire me, I think it's more fun to give it to you and bring value to you as a trader. And instead of just telling you I'm buying something here and selling something here, to really look and say, whether he's right or wrong, I understand why he's buying or selling something. And based on those statistics, he's going to be right a heck of a lot more times than he's wrong, and he's going to make more money in the long run. I think that is the important part here. So instead of signing a million non disclosure agreements, I'd rather just share with you and help grow with you. So, with that being said, our algorithmic strategy right over here would have called a short, right over here would have called a long, right over here would have called a short, which could have worked. But we're going to be ignoring, I will ignore engulfing bars. And I'm not cherry picking any days. I'm just talking about where the algorithmic strategy would have went to go long or short. Right over here it would have gone long. Right over here it would have gone long. Now I'm adjusting it. No, no, this is 30.57. Yeah, it would have gone long right here. Not bad. Now some would say, Mark, why wouldn't have you gone short over here? Now, you might look over here and say, look, Mark, in the past 10 bars, this was the highest bar. Certain setups I am ignoring. When you see the majority of the bars in a tight range like this, I will end up ignoring these bars, by the way. So I have to figure out, and again, I'm sure a lot of you are going to email me and try to help. This would be a trade I wouldn't take because these bars are in a tight range. Now, how do I algorithmically code that? If I was talking to somebody on an IT or somebody who is smarter than me when it comes to computers, I would look for an average range to be a certain number based on the candlesticks. There is no stop on the methodology, Dana. You're risking 100% of the option spread you put in. So if you bet $500, for example, on the methodology, let's say you took General Motors right here, which we would have definitely took. Let's say you took it right over here and you said, I'm risking $500. There is no stop. You're risking $500. If you're doing common stock, generally I would be risking versus the top of this bar. Generally, I will ignore engulfing bars. That's why you've never seen me take an engulfing bar strategy on it. Granted, it's new. You're not going to see it in the future until I prove something otherwise, and that may or may not change. But yes, I'm ignoring engulfing bars. So that's the next part of the strategy. And as weeks go by and we discuss this and we learn more and more, there'll be little tweaks being added again and again to fix it. So if you are shorting here, on General Motors at 38.45 near the close, let's say, your stop would be 39.62. You'd be risking $1.16 per share. And you would be hoping and praying that the stock doesn't open up, gapped up huge one day. When you're in options, There is none of that hoping and praying, just so we're clear. So it's doable with stock. It's safer with options, in my opinion, and for anybody who has a simple understanding of mathematics, in their opinion too. So with that being said, even right over here, where you're looking for a long, what I like to see is I like to see the large ranges. The entry points have to be done by the end of the day. The entry points, Vincent, are based on time, not levels. So as long as you could have predicted that this for example, let's take Caterpillar, the one we actually took, right? Right over here, the short on Monday in Caterpillar before it pooped. On Caterpillar, it closed at 138.95, but it opened at 141.86. So it didn't matter where you bought the puts in Caterpillar as long as the stock closed below 141.86. And you probably could have predicted that probably in the last hour and a half of trading that it was very unlikely it was going to shoot up and close green, which would have been your problem. So if you do it by the end of the day, the odds of you being correct in predicting a stock closing lower than the open is increased substantially. Let me translate that into, English. Stock open, you have a $50 stock. It opens up at $52. It's gapped up 2 points in the morning. At 3:55 p.m., 5 minutes before the market closed, when the stock opened up at 52, it's trading at $50.75. You're pretty much very confident at that point that that bar is going to close red. Now, if by that time, the stock is at 51.90, and it's 10 cents away from closing green based on the way I just described it, you would be in a little bit of a pickle there, Vince. You guys, all right, so let me just stop you guys. Questions, since you're all asking questions. Hi, Kevin. Would AEM be a buy 2 days ago? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yep, sure was, Kevin. Stopping this methodology, the easiest way to do it without blowing yourself up and without subjecting yourself to opinion, thoughts, psychological toxicity is 100% of what you bet. Bet what you're willing to lose in options. 200 bucks, 100 bucks, 50 bucks, 500 bucks, 1000 bucks, 5000 bucks, whatever your number is. So that's the entry points, Vince. Wherever you want. The entry isn't important as much as being in the position before the close. Correct. So if it's a topping out red bar, it would be a put, Steve, exactly. And a bottoming out green candle would be a long. Exactly. So on the cat trade, why buy a option? All right. So MJ is asking on cat, why did you go in the monthlies instead of the weeklies? They would have paid so much more. Right, MJ? You're right. But you think I could predict that this was going to happen like this? What if it digested a little? What if it popped the next day and then dropped? My options would have gotten decimated. Or next week, sure. The earlier your trade works, the less time value you bought out from will generally pay more, generally speaking, right? Generally, that's true. For me, it's safer to go a couple months out because you're doing a put spread and you have one option that's getting beaten up and one option that's winning with a general direction. I don't want to ever get stopped out. hmm So how do you know when techs are a winning position? It's very subjective, Jerry. It's too subjective. I can't give you a mathematical formula. Maybe I'm up 25% of my position. I'm looking at the chart and I'm just not digging it anymore. Maybe I'm up 50%. Maybe I'm down 25% and I give up on it. Maybe I'm down 50% and I give up on it. The truth is that is going to be extremely subjective. And remember, trading is always subjective. There are traders out there who are like, I'm going to risk one and make three. And when traders say that, I go, that's the guy I'm never going to listen to. What do you mean you're going to risk one and make three? How the hell do you know? You're saying nothing could change with the market that would change your mind? You want to pigeonhole yourself in one little thing to make sure that you only do that? I'm going to adjust accordingly to the market. The only thing I am going to be aware of is what my max gain is going to be, what my max loss is going to be. That's it. Now, there might be some situations where, for example, if I buy a bear flag digestive pattern, let me give you an example. Let's say cat, right? Let's say cat didn't drop yesterday, and I bought a put spread right here on Monday, and it digested up a little and it started tightening up like a bear flag wedge. I might buy out of the short side of my call, make money, and hold the put for infinite, or not infinite, but a higher profit. I might take half of the trade off, depending on how it digests. So I am opening up myself to several types of methodologies. Doesn't mean I'm opening the spread and exiting the entire spread in one fell swoop. I might not. I don't make that decision for me. The stock in the market makes that decision for me. See, and that's how we could add value, Max. So Max is saying, interestingly enough, all of those candles for entries are also Bollinger Band breaks on the daily and rejection. Now, how do we intertwine that into the formula? That's how we grow, Max. That's how we grow. What about after hours? I'm not doing these trade options. Options close at 4 o'clock, with the exception of Spider or VIX sometimes. I don't want to get into that, but options generally always close at 4 o'clock p.m. With which, oh, I forgot the example, Vince. Exactly, Diana. So maybe exactly. So maybe a standard, and this is what I'm going to be adding with in the strategy within this room. And again, we'll probably be doing this for like a private Newsbeat huddle where we all huddle up and we tweak the strategy and parameters and scanners. And as I said before, and I'll say it again, the scanner I gave you is phenomenally vanilla right now. It's very simple, very basic. Again, so vague, Vincent. How far from $52 do we want to be? I don't know. Is it flying from 52 to 51.50 to 50 to 51 to, is it going like this, or is it a slow steady curve? I mean, infinite examples to really fully base that decision. All right, Farida. Please explain one more time why I would short General Motors on 12.3. Because this red bar is the highest bar in a 10 candlestick range, and this 10 candlestick range is kind of wide, is why I would do it on 12.3. Why I would not do it on 10.29 is because this is a very tight range. This is a very tight range here on General Motors. I like to see when the 10 candlesticks, look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Look at this. Here are the 10 candlestick ranges. You see that? How it starts here and it goes up here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It starts here and it goes here. This one is sharper. larger up move, 35 to 39.61. You see the difference here? Over here went from a high of, you know, from 31.67 to 34. You see what I mean? It's flatter. I want to see a larger move that brings it to that top red candle here. Now I might go from prior 10 candles to prior 20. Please don't think that I'm stuck on prior 10. I am not. I am developing this strategy. Right over here is a good example of where I would take it. Right over here for a short. Right over here for a short is a perfect example. Right over here for a long is a perfect example. Notice why I would ignore it right here for a long? Anyone want to tell me right over here why I would ignore it? Hold on. I have to find out where here is again. Where was I? All right, I got it. All right. Why would I ignore it right over here on April 26th? Yeah, I did, Richard. I did just go puts on cat. Why would I ignore it here on April 26th? Look. 1, 2, 3, 4, 5, 6. Why would I ignore it here? There are two reasons why I would ignore it here. What are those two reasons why I wouldn't buy it here on April 26th? Engulfing bar, that's one correct reason. Anyone want to share with me the second? Shallow up move. Or right. Didn't really come from a high place. Tight. Exactly. Correct. Correct. But I would buy it right over here on May 3rd utilizing the methodology, and that could have been a home run. Do you guys see that? You guys see that? Now, read Alan's question in chat. Read Alan's question in chat. Does this strategy work intraday on the 5-minute chart? It does, Alan. And I've been doing a lot of that recently. And it's how I've been calling a lot of these tops and bottoms recently. You want to see something? Read what Alan said. Focus in on what Alan is saying for one moment, and then we'll go back to it. Does this strategy work intraday on a 5-minute chart? Read that. You ready? Watch this. Here's the 5-minute of the triple Qs. Let's go into the one chart. There we go. 5-minute of the triple Qs. Here's yesterday. Stock opens, high red bar. You could have shorted there. Let's say we would ignore it because it's too tight, right? Comes down, still a little tight. Comes all the way down here. Close with a red bar. You wouldn't buy it. Oh, but let's say right here. So this is where I actually tried buying the triple Qs the other day. And I was wrong. I got stopped out. Fair enough. Here's an example of where I would buy it and it would fail on the triple Qs yesterday. Does it work on the 5-minute? Absolutely. Keep your eyes open. How about right over here? Notice the trend lines I have drawn here. The algorithmic trend lines are also where they bounced. So not only does it work on the 5-minute of the triple Qs, Alan, I've noticed some statistical frequency based on algorithmic trend lines hitting in real time with those candlesticks. Do you guys see that? Those yellow lines you see are lines I drew on the daily, translated in a 5-minute. The parameters for the 5 minutes are identical as the parameters for the daily, Golan. I agree, Steve. XLF. So the other day when XLF fell, I was buying it right over here on the financials, right? Or I was buying Morgan Stanley when XLF bottomed out here. And it held up. That's where it actually stopped going down, and then it ended up stopping me out. See that? Then I ended up ignoring it because it was a crazy day. Exactly, Ryan. Exactly. That is exactly what I did. It would have worked with a lot more than that, Mr. Albano. I could show you 200 other names it would have worked on too. So I can't tell you statistically the answer to your question, Dan. So why does duration matter versus putting a range magnitude on like a 10% change? The truth is I might do both. Like I said, these are all excellent questions, and you might actually have really good answers for them. But at the moment, my strategy is very vanilla, and I'm being very honest, and I'm showing you returns in another market. So, for example, I'm also trying this in Forex, in case you didn't know. So what I did in Forex, oh shit, it worked. It worked. I didn't even realize. I just looked at my Forex account. It just got a profit. So on my Forex account, look what I did. I'll show you right now. It's funny because it works in every market. It's working for me in overseas markets. It's working in this market. It's working in Forex market. Watch. So what I did in the Forex market is I said I'm trying my new swing strategy on Forex. This is from yesterday, 19 hours ago. So I'm trying my new swing strategy on Forex. I just used a market order to enter, similar to what I would not really do in the US market. Sometimes I'll use a bid, sometimes I'll use in a market, but I used a market order to enter. Feel free to see my success first. So what I did here was, if you can't see this, I shorted New Zealand Japanese yen at 78.34 and put a stop at the top of the candlestick and a simple take profit at 78.05. That trade actually worked, or take profit level hit. Let's see what New Zealand Japanese yen looks like now. And I'll show you the chart. For some reason, my chart isn't updating here on New Zealand Japanese yen. Does anybody want to give me a live quote of that? You took 50 pips of that trade. There you go. There you go. There you go. Now look, I don't care what instrument, I don't care if it's Bitcoin, I don't care if it's Forex, I don't care what it is, I don't care US stocks, non-US stocks. Look at this. Maybe, Alex. Nice. It's at, oh, perfect. So what I did yesterday is, look, I actually ended up taking an engulfing bar by accident from the top here. But what I did, because it was actually trading higher and I go to sleep and these candlesticks close at 12 o'clock at night for me. So I took it, you know, 5 hours, let's say, before the market closed, but it still worked. Look at this. You come up, you put in a red bar. I opened up with a short, put a stop at the top here, took profits. Don, you took 50 pips in the trade. I don't even know how to calculate a pip, to be honest. I don't care, but I made money too. So what I want you guys to do is look on your charts over the weekend for you chartists and look for these opportunities. Look at them. Look how many of them are working. Show some Amazon. You want to see Amazon? I mean, all right. So Amazon, you would have actually not taken the short on Monday, even though I could see it would have worked. However, Amazon, you would have gone long right here. Would have been your last trade in Amazon. Long on November 20th for a swing in Amazon. Would have went from $1,534 to $1,778. 250 points approximately in Amazon. Not bad for 8 trading days, right? How about the trade before that, Mark? What would have been the trade before that? How about right over here on Amazon on November 8th for a short in Amazon when it went from 1754 down to 1420? $330 drop in Amazon. How about the time before that, Richard? What would have been the last trade you took? How about right over here, October 30th on Amazon for a long before it exploded out all the way up here? How about a short right here? That would have been following the methodology. The stop. All right, so in the Forex market, I do have a stop. I'm not doing Forex options. In the Forex market, I set a stop at the top here above the break of the top of this candle. In the stock market, zero stop. Your stop is what you put in. Simple, right? Amazing, Richard? I agree. Want to know it's amazing? I tried it in non-US market and I took 164 trades and 153 of them closed out profitably with 11 of them failing. Exactly, Ryan. You throw $500 worth of options at it, you screw up royally, you're losing 500 bucks. Everything goes against you, you're losing 500 bucks. Exactly. Nice, Don. Well, remember what I said, Don. So what I was telling you guys is when I walk in some of these, I don't go to prop firms anymore, but when I walk into some of the big tier one firms and I drop my track record on the table, you know what the first and I'm not boasting or bragging because I'm sharing with you what I'm doing. The first thing they should tell you is how much money do you want? How much risk do you want on the money? When can you start? Those are the three things you want them telling you. And remember when I told you guys the other day that that was my goal for you? I'm not sure if you were here the other day, Don C, but that's exactly what I would love to help you accomplish. Don't worry, Miriam. You joined late. This video is being recorded, and I'll share with you the link. What are the parameters for drawing the algo trend lines? Todd, it's going to be more of a 3.5 hour course. I think they actually bundled it with the annual, so it's just more and more value into this room. And I can't really go into a large class right now like that. I couldn't, if I could explain it in 5 minutes or 10 minutes, I would. I can't. Otherwise, I would. Really? They wouldn't give you stud? Well, that's not accurate. Your face would say otherwise. So, ladies and gentlemen, we're going to be developing these strategies throughout the week. Look for statistical anomalies. Look for statistical anomalies. Look for these things. Look at what we discussed with you. Tell us how you can make it better. We're going to give you a week. We're going to give you a week. How can you make these strategies more effective for your trading? Why is something so simple working now? You don't need to answer that question. That's irrelevant. Why is this working this year so far? I have no idea. The important thing is that we identified it, and the important thing is what are we going to do now with it? So always remember that um, SMH. I mean, there's so many examples. All right, so yeah, SMH, you could have taken an overnight short on Monday. Many names you could have done overnight short on Monday. There's so many examples. Look at this short right over here on June 7th. Sometimes they're going to work, sometimes they're not. We all know that they work at times and they fail at others. It's going to work generally in the long run. I do not have the stats for this methodology last year. Great question, Dan. I do not. I don't have that. Can we use a screener to help us find these magic top and red and bottom green bars, Farida? Absolutely. And that is what we shared with you here on our easy scan. So if you have TC2000 or free stock charts, here is the green bar, the green bottom bar. Just don't copy the words green bottom bar. Just copy the C forward. And again, this is a very simple vanilla strategy. And yes, I look at them and make other conclusions. A red topping bar, and it's that. Me personally, no, but I can ask for it. I honestly, I haven't asked for it. I couldn't really care much to ask. I would do it for you, Dan, but I could care less about it other than that. I care about what's working today. I think last year is important. It's more important last year than 2 years ago, and 2 years ago is more important than 3 years ago. But this year is more important than last year. Oh, and Dave shared Thinkorswim. I'm going to ask for you, Dan. I'm going to ask for you, probably based on the Qs or spiders, like or the Nasdaq 100 or spiders. I'll try to get you a list of success. Um, so Farida, I think Dave W shared his Thinkorswim. You took AXP puts the same time. There we go. There's your TOS scan. Thank you, Dave. Appreciate that. You took American Express. That worked. Well played, Eon. Cass, new to options. If possible, please explain why monthly versus weekly or vice versa. It's just giving it more time for the trade to work is the simplest way to say it, Cass can. The truth is, if it works out sooner than later, the earlier options worked out better. It's just trying to play safe than sorry is the only reasoning behind it. MJ, potentially MJ. I mean, or sell it right before. I don't want to get assigned stock if that's what you're insinuating. So the day of expiration. Okay. Well, I have to go. I have to go run right now. I have to go take a quick drive out. I wanted to genuinely thank you guys for spending time here today. I almost feel like this day off was a blessing in disguise. I almost felt like today was a blessing in disguise where we were able to put this all together because it's a day that we would normally work. And I just felt like to come together like this and discuss all these questions and everything that people have and put it together in a meaningful manner was, dare I say, heaven sent. And I want to thank you guys for taking the time as well. Um, Max, you are awesome too. Met Max at the Active Trader Summit. I think that's why they didn't give you the name Stud Don. Max has it on reserve. But thank you so much for being part of this gathering. I hope you guys enjoyed it. The Newsbeat show will be tonight, and of course we have the Newsbeat. We have a normal day of trading tomorrow. I hope you guys enjoyed this. Thank Lauren. Thank you so much. I hope you guys enjoyed the Newsbeat Live. Huge free education bonanza number 1 and number 2. Happy trading, make money. I'll see you guys tonight and tomorrow right here on the Newsbeat Live trading broadcast. Have a wonderful, wonderful Wednesday.